Hi, welcome to Trading Without Fear. In today's episode, I'm going to be going over my breakout trade of ICOA. So the breakout occurred at 0.018. I ended up buying into it at 0.01889. And as soon as I got the alert, I ended up buying the trigger, or just pulling the trigger on the trade, so you can see where I put that breakout level right there. Now what I'm going to be doing here in a second is placing my bracket orders on there. My risk will be about 0.01777. And you can see it pop up here in a second. And there you go. So when I initially put it on the bracket orders, my original aim was for 60% sell target. And I was thinking of the 60% sell target basically because the chart patterns from a lot of the OTCs have actually been kind of running a little bit. I know there's some regulations coming up in the market here shortly as far as OTC trades and how it's going to affect it. So I wasn't really looking into holding on to this overnight, but I wanted to see if there was a potential of a 60% push on the day. So you can see how it has this pullback. This pullback right here didn't actually freak me out at all. As long as it continues going higher or it doesn't actually get me stopped out, I'm okay being in the trade. With the breakout pattern, it's not a guarantee it's going to work, but there's always a higher probability that's in your favor. And since I'm a mechanical trader, I just based off of everything. Now with the type of trading that I do, it's easy enough that you could easily place a trade and either look for something else or you can walk away on the day. If you have kids, you can always watch your kids and just let the trade kind of work out. As long as you're aiming for the proper kind of sell targets, and I'll be going over that a little bit later, there's a good chance that you actually will walk away with the profit on this type of trading strategy. So now this video is sped up by 2,500%. You're watching a full day's worth of trading price action in about 15 minutes. So keep that in mind. This did move a lot slower than what you're actually seeing on screen. And so at this point, the high is 0.0209. And I'm kind of looking at it and thinking for this point, it's going to be the top. I think right there from where I bought it at to where it's at now is approximately almost 10%. And so what I did on the screen is I put the red dotted line is where my risk is at. The green dotted line is where the buy price is. So that way you can see a visual on your screen of where I'm buying, where my risk level is, and how much room I'm giving it. I got a couple of extra alerts there. Just want to check them out. I do have a dual screen monitor or dual monitor system. So I am switching in between screens right now. This one's recording on my main screen, so you may see the mouse go back and forth. And at one point, I do actually kind of make this recording view a little bit smaller. So that way I have access to my scans, my watch list for later on the day. So at this point, I'm thinking that it's possible that I can come back down to around VWAP around the 0.02 level. For a lot of people with how slow this initial price action was, is about an hour to hour and a half time of where it's kind of just trending sideways. That may actually board people out a lot. And with the trading strategy that I have, as a mechanical trader, working off of probabilities and you know the patterns present themselves with an opportunity. If you wanted to during this time, as soon as you got into it, place your bracket orders, you could easily just walk away. If you have kids, you can go ahead and take care of your kids. If you have other work to do, you can go do that. The form of trading that I do is, in my opinion, ideal for traders who also have full-time jobs, traders who have, are parents, have to watch their kids. You can easily place the trade and kind of just let the trade work, check it throughout the day, or even check it at the end of the day and see whether or not you're up or down on the trade. And that's pretty much it as far as the mechanical trading goes. It's a very simple, fear-free type of a trading style, and as long as you have a clear pattern and you have the data to actually back up what you're looking for, that's kind of the way it is. Now, with this particular trade, I did end up committing a trading error on it. Initially, my first bracket order, the one you're seeing on screen right now, was for a 60% gain. There is an issue that I have when it comes down to OTCs is wanting more from the patterns. I know that OTCs can have a potential of running quite a bit on the day, several hundred to 7,000% in a single day. And so I did actually write down some rules that I need to abide by. One of the rules that I was trying to go for was going for a 40% gain on these. Taking 40% on the day is actually a really good return. So right here, when it had this first red candle, I noticed that it's starting to get weak, so it's coming back down. Kind of blew through VWAP, got back down to my buy price. I'm currently down and over and under, and that was approximately like 2 minutes worth of time that I was down. And it kind of looks like it's getting weak here. So at this point, I am wondering whether or not the trade is going to work. If that was the initial push, was that 10 to 15% right there. And it snaps back up above VWAP. I move my screen over just so it's kind of getting the whole day's worth of price action right there. And my thought process is unless it actually comes down and gets me stopped out, or it actually goes up, it doesn't really matter what it does. I'm accepting the trade. If it does come down and get me stopped out, I'm looking at about a $6.75 loss, and including commissions, so about $16.75 is the total loss on that trade. With this being a $140 position, I'm not too worried about it. If it was a lot larger position relative to my account size, that may be a different story. And I do have some different ideas of how much how much size a person should have in conjunction with how big their account is, and also what their mental state of mind allows them to trade at the time. So it comes back down, and it looks like to me it's actually holding this level right here as a support. And also, if you look down here with the bid and the ask, they're actually kind of far apart. It keeps jumping between 0.198 and 0.193 and 0.192. So it just also, when you're seeing price action like this, you want to look at the level twos. Now, again, I don't use the level twos as to gauge the trade or the direction of the trade. But what I do is I use the level twos as a guide to determine what's happening with what I'm seeing on the price. If I'm seeing the bid and the ask really far apart, and you're seeing those candles kind of go up and down, to me that just means that the market makers are trying to find a place to find buyers and sellers. And for some people, that actually scares them out of the trade. And when they see those big candles come down, and they just get scared out and sell really quickly. So you can see it started to tick back up to the 0.0196, 0.0197. And from this point on, I'm just going to refer to them as a 19 or 20, just to make it a little bit easier. So the level twos for me, I don't really look at it. It's more of the probabilities of the chart and the probabilities of the actual overall pattern is what I'm looking for. And we're going to push through VWAP and get through to a 2005. And it kind of pulls back and just kind of settles above VWAP, and then snaps back under, kind of drops back below VWAP again. And again, just look at the difference between the bid and the ask. They're pretty far apart. So when that range is like that, it doesn't really scare me out. it just tells me that the buyers aren't convicted enough to kind of get close enough to where the sellers are at. And so that's why you're having this kind of whipsaw action as far as the chart goes. So right there, we end up getting a little bit of volume, pushes back up there, and kind of comes back down again. So, with that type of a price movement, in my opinion, it definitely means that there's someone behind this move, causing it to try to keep it above VWAP, try to keep the trend intact to entice people to come in and buy more. So every time it came down, somebody came in and bid it back up. And I am actually writing down in my trading workbook my thoughts and feelings on this trade. I'm pretty comfortable with holding this. It's a very clean breakout. It's following trend, and there's definitely a trend line. This area right here was acting as support, acted as support again, started making some higher lows, and eventually once it was holding above VWAP and kind of broke through, now we got a new high. So at this point, I ended up walking away from my computer, had to go and watch my son, and I'm kind of just monitoring it on the phone, making sure that, the trade's working out or there's not any sort of adjustments I may have to do on the fly. And so one of the things I've also been doing a lot more lately that's helped me a lot with my trades is making sure that I'm putting the 15-day, 15-minute chart up. That's something I used to do, but for whatever reason, I stopped kind of doing that. I only was looking at the 3-month, 1-day time frame, and was kind of losing track of where the support and resistance was at. And so by having the 15-day, 15-minute chart or the 5-day, 5-minute chart, whatever time frame the entire move is at, that's what I'm going to be looking at. Especially since I'm looking at patterns that has been forming over the past couple of days or maybe a week or two. So right now it's kind of doing a stair-stepping pattern where it kind of ramps up, pulls back a little bit, ramps up, kind of consolidates for a moment. At this point, I'm kind of thinking as we start to get into the 1 o'clock range, which is the 1300 hours, that we might start to see a little bit more volume coming in and push it up, and we'll see what happens. So at this point, I don't realize that I've made a trading error as far as going for too much outside the probabilities. The breakout patterns have a 54.66% chance or a 54.66% gain. So what I like to do is kind of round just to give me a higher odds of me taking the most amount of the move as I can. And so I was looking at this as more of an ABCD type pattern play of around that 50-60%. And so I'm already outside of the range where the probabilities are in my favor. And there's definitely potential of holding this overnight, but a lot of the OTC trades haven't really been gapping up the next day. They've been having a pullback, and some of them just really haven't been holding trend. They sometimes are also dying. It could also be because of those regulations. So we have this nice push up to 2701. And when it starts to come back down, I start noticing that the chart's kind of not acting the same way it was before. During this time, it was a lot faster. And it was right here on this candle where I kind of recognized that I made an error as far as the probabilities. I was looking for a 40% gain. That's what I was telling myself that I should be aiming for is on OTC trades across the board, whether it's a ABCD pattern or a breakout pattern. My goal should be 40% consistently. So I ended up putting a sell target right there, which was 40%, ended up taking away and started coming down. I was kind of afraid that sometimes these will just drop all of a sudden right before market close. That's kind of what it's doing. So I'm like, okay, well, where am I going to get out? Um, should I cut it here? So what I ended up seeing was that it was kind of coming up. I got out right there, and that's pretty much the end of the trade. So that was about a. So that's pretty much it for that trade. That was a good profit of about $52, $53 with a $140 position. And that's pretty much it for this episode. If you do like this content, subscribe to the channel and leave a comment below of how your trading day was on how you finished your September. And we'll see you next time.